The mortgage lender you choose to work with can literally make or break the deal when you're buying a house. Now, every lender is very different, so who you choose to work with matters a lot. Buying a house is already stressful and complicated enough. The last thing you want is a lender costing you thousands of dollars in higher rates and extra fees, or someone who takes a week longer just to process the loan. And to tell you the truth, a bad lender can even cost you the house itself. And you want to work with someone who can explain things in a way that actually makes sense without all the financial jargon. Now, I have seen too many deals blow up because the lender messed something up and the buyer lost the house because of it. So in this video, I want to walk through some of the big differences between working with a really big lender versus a smaller, more local lender. And I'm going to talk about some reasons that sellers and listing agents care way more about who your lender is than you probably think. Now, you have two very different choices with lenders. You have some really big lenders. These are the guys with billion-dollar ad budgets. They'll buy commercials during the Super Bowl. You've seen them everywhere. And then you've got way smaller, more local lenders in your city that you probably haven't heard of. Now, across these types of lenders, every lender is going to be different as far as the types of loans they offer, their interest rates, and their fees. But the actual loan you're getting is oftentimes the same thing. For example, let's say you're a veteran and you want to buy a house with a VA loan. You could go with a big national lender or a much smaller local one. The VA loan you're getting is still going to be a 30-year fixed rate mortgage backed by the Department of Veterans Affairs. So the end result is the same, but how you get there is going to be very different. So the big and the small lenders will vary in terms of efficiency, customer service, communication, and their reputation being a big one. Now, here's the thing a lot of buyers miss. What happens after you close on the house and you get the loan is a really important factor in deciding who to work with to get the loan. Now, if you don't know me, my name is Jacob Peistrup. This is the Living St. Louis channel. Now, I am not a mortgage lender, but I run a real estate team with 5 agents here in town, and trust me when I say we have seen our fair share of horror stories of things that went wrong. Someone lost the house they wanted because something went wrong on the mortgage side of things. Now, what I'm sharing in this video is just based on our experience working with hundreds of buyers over the years in St. Louis. Every situation is different, and you have to do what makes sense for you. So neither option is right or wrong. Big lender, smaller, somewhere in between. It varies by person. I'm just trying to share some things that maybe you haven't considered when deciding what mortgage lender you want to work with. The national brand lenders are the ones you've seen everywhere and you've probably heard them a bunch. I mean, they spend so much on advertising, it's not funny. You will see them all over the internet. You'll see them in magazines, on billboards, on bus stop benches, you name it, they're there. They spend a lot of money on marketing. They have really fancy, sleek, easy to use websites. It's very easy to submit an application and get pre-approved pretty quickly. And some of these big lenders are actually online only, meaning everything you're doing is through a computer. Some of them have more of a hybrid model where if you wanted to walk into one of their offices, if they have one near you, and sit down, talk to someone in person, you could do that. Now, a small local lender is going to have a way smaller operation compared to the big ones. And honestly, I mean, there's a bunch of great local lenders in St. Louis that you probably haven't heard of because they're just so small. They usually have a smaller team of people, less bureaucracy, and lower overhead costs. But they can be really great when you want more one-on-one help from someone who is local, they are based in your area, and they can help you out without having to call a call center and get on a wait list just to talk with someone. Now, a smaller lender might do a couple hundred deals per year. They might do a couple thousand loans per year, but they're not going to be doing tens of thousands of loans every year like the big guys. And so that often means that you get way more one-on-one support as the buyer. Now, here is the number one most important thing you should think about when deciding who your lender is. And it's not about the rates or the fees, it's about the communication. So let's talk about how that works oftentimes with a big lender. When you have a national lender, you are working through a computer. So it is fully on you to fill out the application, submit all your paperwork, have your ducks in a row, know which loan product and type that you want. And if you need help, you will sometimes get a dedicated loan expert, or you will oftentimes just have to call the 1-800 support number to get in touch with someone. So sometimes you will have one person who is your dedicated point of contact for the loan, and other times You will have a lot of different people working on your file, from the application through underwriting, appraisal, loan commitment. Sometimes it's like every, step of the process is handled by a different person. So if you have questions, it tends to be more runaround. Working with a bigger bank means they're going to have a highly automated process. And so, like I said, they've got different departments for everything, and it might take, calling a few different people or waiting on a few call lines to actually get the answer to your question. Whether that's you as the buyer that wants to know something, or your agent or the listing agent on the other side of the deal, you're all going to just have to go through that support line. And so when there's multiple people trying to call the lender, that can get very tricky. Now, if you're a very self-sufficient person and you know exactly what kind of loan you want, you've got your paperwork ready to go, and you just need a very quick system that can process all that for you, and you're not really worried about support and customer service, then online can be a really solid option. Just be mindful with that, because what I've noticed is sometimes we work with people that think they know exactly what kind of loan product they want, but in reality, there's a different kind of loan out there that might be a little bit better for them. And sometimes these big lenders aren't going to tell you, hey, there's actually a better loan product than the one you said you wanted in your initial application. Now, for the majority of clients my team and I work with, using a local lender over a big brand is usually a much easier and smoother process that also often saves money. Let's talk about how a local lender can be different. With a local lender, you oftentimes will get a dedicated person who is your go-to point of contact for everything, and they're with you throughout the process, from application through closing. You've got one person there to help you out. Local lenders vary a lot, so their style of communication, how good they are at communicating, and how easy they are with paperwork, it's going to vary a lot by person. For example, my real estate team and I, we love using Stuart Rosenblum over with American Mortgage Corporation. He is our mortgage guy. We've worked with dozens of lenders over the years, and Stuart is just consistently above the rest with communication and the types of loans he offers. So if you're looking at buying or refinancing in the St. Louis area, whether you are in Missouri or Illinois, I'll have his info in the description for you. But let's talk about what you're going to get oftentimes with a local lender. The whole process is usually going to have way more support along the way, and maybe more personalized to you in figuring out, okay, which loan option actually makes the most sense for you. Is it FHA? Is it conventional? 5% down, 10% down, 20%? What makes the most sense for you and your situation? And what I love with the local lender is you can usually call them, you can text them, you can FaceTime, you can get on a Zoom call, you can go meet them in person at a coffee shop if you want. That's the whole point of them being local to your area. Like, they are there to help you along the way. Another really big thing people underestimate is how your lender communicates during weekends and off hours, because a lot of the big chains, they are strictly in that 9 to 5 window. But here's the really big thing, let me tell you, more often than not, when we are writing offers and submitting on a listing, it happens after 5 o'clock when everyone is off work. So getting in touch after 5 o'clock is huge. And you usually want someone where you can pick up the phone and call their cell. You don't want to have to go through a call center when it's 7 o'clock at night on a Friday and you're trying to buy a house. Another really big thing to look for in a lender's communication is someone who can directly advocate for you to the listing agent. We love when lenders can actually call the listing agent for our buyers and just explain, hey, they are in a strong financial position. They got a good job, steady income, and I have a really good feeling they're going to get the loan, so qualification is not going to be a problem. What I have loved seeing with our buyers that work with Stuart is that he's really like your financial and your credit coach, as far as, giving you advice like, hey, you want to get your credit score up, here's what you want to do. If you're trying to save money on your mortgage payment in certain ways, here's how we can do that. He's really there to kind of coach you and help ask the right questions to figure out what makes sense for you. Now, big lenders don't always have that same coaching mentality as a smaller lender, and there's a few reasons for that, but one reason, not the only one is that they have to pay commissioned loan officers. And so first of all, that's a big cost for the lender, paying commissions to their loan officers, who are like their salespeople. They're selling loans, and they get paid a different commission rate depending on the loan type. So from conventional, FHA, VA, depending on what you fill out your application wanting as your loan, sometimes they don't always need to tell you, hey, you might be better off with a different type of loan if it's one where it pays a lower commission rate. And so that is part of the incentive. And smaller, more local lenders don't have that same cost structure. A lot of them don't always have commissioned loan officers they have to pay money to. And so that saves them money. But the really important thing it does is it allows them to get more creative with the loans they offer. So you might work with a smaller, more local lender that saves money by the way they write loans, and they can offer you some more out-of-the-box programs you haven't heard of before. I'll give you one example, the Bagel Loan. What is that? Have you heard of that before? The Bagel Loan is what Stuart calls his signature loan product over at American Mortgage Corporation. It's actually a zero closing cost loan. If you are borrowing over $200,000 and you close with a specific title company that Stuart has a relationship with. So those are the two criteria. Bagel Loan looks like a zero because you got zero closing costs. That's just one example. And even if your closing costs are literally zero on the loan, that doesn't mean you don't have to pay something at closing, because you're still going to have to bring your down payment. That is, if you have one, there are zero down payment loans out there. You're going to have to bring your prepaid taxes and your prepaid insurance to closing also, unless you're getting a seller credit of some type to cover that. The next really big difference I want to talk about when you're deciding between big box lender versus small local, the actual loan process itself is going to be very different from a big corporation down to a smaller, more boutique mortgage lender. And in our experience, bigger lenders typically take longer to do the loan. They have way more levels of bureaucracy they got to go through to get that loan approved, and their underwriting systems are way more rigid and strict. Now, on the other hand, a more local lender, in our experience, the ones we've worked with, they move through the process faster and more efficiently. They just get it done quicker because they are not tied down by all these rigid systems they have in place and layers of bureaucracy. Now, with an online lender specifically, let's talk about how that process is going to look. A lot of them have these, 24/7 instant application dashboards where you can go on, submit your application, and they will usually give you some kind of automatic instant pre-qualification. Now, that pre-qualification does not really mean very much if you're looking to write an offer on a house and, send over a letter from your lender. What you really need is a verified pre-approval where they have looked at your tax returns and income history. Now, after the application, the entire process with a bigger lender tends to be way more cookie cutter and highly automated. And so if you are a W-2 employee, you'll be fine. But if you're in a more unique financial situation, maybe you're self-employed, maybe you run a business, you're commission-based, that's me. Let me tell you, it can, cause some issues getting pre-approved and it makes it more complicated. If you have different streams of income, or maybe you have multiple jobs, stuff like that can make it more complicated to get through the paperwork process with some of these bigger lenders. They need more paperwork filled out. There's more redundancy through the process, and it just takes longer. Now, one thing I will say about the whole underwriting process, when you're working with a bigger lender, and especially when you don't really have a dedicated point of contact, is that you really have to self-advocate, because sometimes the underwriter can miss something. They can get a number wrong, or they can, forget something entirely from the application. Some things we've seen them miss before, they've gotten someone's car payment wrong, or they made it higher than it was. They got the wrong property tax amount for the house in question. They got a zip code wrong. They got someone's insurance information wrong. All of that can really play a role in the underwriting process. And if that information is wrong and we don't catch it early, sometimes that really creates delays later down the line. Another thing is that we've noticed with bigger lenders, they will sometimes use appraisers from out of the area who are not familiar with your local market. And so if the house doesn't appraise, that's a problem. And if the appraiser is not really familiar with your local market, that does not benefit you as the buyer. Now, let's compare when you work with a more local lender, for example, Stuart, for us in this case, you're gonna have an online application just the same. They're gonna ask for the same information, usually give you a pre-approval within a few hours. So it's not going to be instant, but here's a really big thing with a pre-approval. So Stuart actually gives you the ability to generate your own pre-approval letter for any amount up to your maximum in your dashboard. And that is a huge time saver. You might think that makes a lot of sense. Why don't all lenders do that? That's a great question, but it is huge when you can create your own pre-approval letter without having to call up your lender every time you need to show a different amount for your loan when you're submitting an offer. Because what happens all the time is, let's say our clients are approved for 600,000, but they're looking in the 500s. They want to submit an offer on a house, and we have a pre-approval letter right now that says 500,000. But we want to go over asking price because we need to be competitive, and we need a pre-approval letter that says 525,000. Oftentimes, with most lenders, you have to call them to get them to send you that. And again, if you are after 5 o'clock or you're calling on a weekend, sometimes you can't get that pre-approval letter in time. Now, underwriting. When you have someone that's more local, they're probably going to be more involved throughout the underwriting process. Your loan officer is not going to be the one who is underwriting the loan, crunching the numbers to, determine if you qualify or not, but they should be overseeing that process and checking, all the numbers from whoever the underwriter is. That way, like I said, we can catch mistakes early before they cause problems later on, especially if you have someone that does underwriting internally. So with Stuart, that is the case. But if you're working with, a mortgage broker who's not a mortgage banker, brokers don't do their own underwriting. So having someone that is involved in that process is huge for you as the buyer. Another big thing with underwriting is work with someone who can underwrite both using Fannie Mae systems and Freddie Mac. Most lenders only underwrite to Fannie Mae. Stuart uses both, and so that means he has more flexibility with the loans he offers because he has access to 2 underwriting systems, not just one. Now, Stuart is a mortgage banker. He's not a mortgage broker. A mortgage broker does not underwrite or fund their own loans. Stuart does both. So that means that he has way more flexibility and a lot more control over the entire process. And that is a good thing if you're a buyer or you're looking to refinance. Now, with appraisal, your lender cannot choose the appraiser, but what Stuart does for our clients is he selects the group of appraisers who are, best suited for the area we're buying a house in. And then a third party decides which appraiser out of those options is going to be your appraiser. But here's the key thing. Stuart is putting together the list of options. Someone else is choosing. So the goal here is to make sure that you are getting an appraiser who really knows the St. Louis area and can actually give you a good appraisal. Now let's talk about the third thing. Here is a really big thing a lot of buyers don't think about when they're applying for the mortgage. And that's actually what happens after closing and after the loan is funded. Because the mortgage process does not end when you get the keys to the house. In fact, it's really just beginning. With a big online lender, if you need help with something after closing, once your file has been closed, good luck. Now, if you have the contact information for your point of contact, that's ideal. But even then, they might still tell you have to go back through the 1-800 number, get a support ticket, wait in line. They might, you might have to go on and use an online chat bot to get some answers. It's not going to be a very easy process. Now, if you're using a local lender like Stuart, you can call him, text him, email him after closing, and he will have an answer for your question. And one thing his team does that I really like is that even after you close on the house, they will still watch the market and monitor interest rates for you so that when they drop, they actually notify you and say, hey, rates have dropped. Do you want to refinance? And you can refinance 100% for free if you use the Bagel Loan and borrowed over $200,000. Let's say even if you didn't use the Bagel Loan specifically, you can still refinance with Stuart, and I'm sure he can get you a better rate and better terms for your mortgage. Here is another really important thing a lot of buyers don't think about in deciding which lender to work with, and that is reputation matters, and you want a lender who has a good reputation with listing agents and sellers, not just buyers. And this is especially important if you're in a multiple offer situation, because when that listing agent is reviewing offers with their seller, if they're going offers with pre-approval letters from lenders that they do not trust, they've had bad experiences with as far as delays, losing the deal, all sorts of complications, they will oftentimes lean towards a different offer with a better lender, even if it's for a lower price, because they want someone they know is going to close the deal. And this is going to sound counterintuitive, I know, but in our experience, it is often the bigger lenders that cause the biggest problems. Whereas working with someone local like Stuart, they run a smaller operation. Someone like Stuart, he's putting his reputation on the line with every deal he closes. A bigger lender can afford to really mess up, screw someone over, and it doesn't matter because they're still going to get more clients. Someone's work ethic and their reputation is huge. And that is one of my favorite things about Stuart. He goes to bat for his clients. He is their advocate. Doing a good job for his clients is a top priority. And I don't always get that same vibe from some of the bigger lenders we've worked with. Again, whether we're working with buyers or we are, working with a seller and talking them through offers on a house, these are some things we think about. And the reputation is huge. Now, listing agents will often call the buyer's lender before they accept the offer just to double check. They are approved, they're qualified for the house, and there shouldn't be any problems getting the loan. Now, if your lender is hard to get a hold of or they just don't answer the phone after 5 o'clock, that can really make a bad impression when we're trying to get your offer accepted by a listing agent and a seller. And that is another reason why it is so important to work with a lender who is also local to your area, because you want someone who's done, ideally, a lot of loans in that area, because the more loans they've done, the better chances they have of having a good reputation with listing agents. Working with a listing agent who actually knows your lender is huge. It makes getting offers accepted way easier. It makes the whole process just a lot smoother. So again, please, if you guys are looking to buy or refinance, reach out to Stuart and his team. Call, text, email. I'll have information down below. You can even just go Google the Bagel Loan and you will find his website if you want to read more about how that works. And also, closing costs can be pretty complicated and confusing. So if you want to learn a little bit more about how that works, I do have another video. Go check that out, just to cover everything from closing costs, down payment, inspection costs, prepaids. There's a lot that goes into the closing costs and what you bring to the closing table. So go watch that video, reach out to Stuart. Thanks for watching, and I will see you in the next video. Take care.